And there you have it. The markets are officially closed on this Friday, October 4th. Welcome, investors and traders. I'm AJ Monte, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I magnify the charts right here, you could see that we closed today with a perfect hanging man. That hanging man candle has been showing up a couple of times here over the last week and a half. We see a hanging man right there. That followed a shooting star, which is also bearish. And today's hanging man candle basically started off with the market gapping up today. We traded down towards the middle of the day. Most of this is on the heels of the employment numbers that came out at 8:30 a.m., coupled with the delay in the strike at the ports. And so combine that with all the positive data that we're seeing, we had the rally. Now, when it comes to jobs numbers, we know we cannot rely on those. I'm going to get to that in a minute when we show the labor participation rate, which in my opinion is much more accurate in reflecting the employment numbers because they're not as easily manipulated. And so my forecast for next week, if you take a look, we have some conflicting signals down here. We have the hanging man candle, which is bearish. We have a fairly wide divergence from that moving average. Nothing really to write home about, but it's still above that moving average. And we have the oscillators right in the middle of the scale here. Now, this is not the first time we've seen this when the markets were more or less forming their top. You could see back here we bounced off of that momentum line right there. Shortly thereafter, what happened? We dumped at the beginning of August. So we're basically stuck in a range right now. What I'm going to do is draw out that channel for you with my channel lines. I don't do this often, but I will do that for you. My downside target down here right around that gap fill is still in place. And if I draw the line parallel to the high right here, you can see this is where we're most likely going to stay for a little while. We might even stay in that channel until election day, and then I think all hell is going to break loose. Why do I think that? Because in election year, the incumbents want the economy to look as rosy as possible. They don't want to rock the boat, so to speak. So we could just be in this holding pattern for a little while before we start to go lower. So I'm still keeping that downside target on DIA right down there at 411.32. And we might even test the high early on next week up here closer to $14. We'll have to see, but I do not believe we're going to rip higher like many of the bulls believe. Moving on to IWM, you'll see we have that same pattern, very much like a doji / hanging man. We have the oscillators are moving up. After I go through the daily analysis in all these markets, I'm going to show you the weekly and monthly charts. My downside target is still in place at 212.78. We might test that resistance right there next week, up there at around 220. We'll have to see, but my downside target's still in place, just like I had back here and just like I had back here. It sometimes takes a little while, but the percentage of accuracy with these charts is incredibly good. Over 82% of the targets wind up getting hit. And so that is IWM. Looking at QQQ, we're going to see the same thing. We had a gap up today, and then we traded back down to fill the intraday gap. We have the oscillators still showing right in the middle of these indicators here. We do have an increase in volume on the way up, but notice that's an increase in volume on a bearish candle. So that means that there was a battle today. As it turns out, that candle is still very bearish. We've seen that before. We've seen hanging man here like that. We saw a little bit of a pivot, and then what happened right down at the beginning of September. Remember, October is the worst month of the year. September and October are the two worst months, but October is the absolute worst. And you can count on the fact that we have a lot of October left in this month. Moving right along to SPY, we have that hanging man again. It's showing up in all the major market ETFs. This is another one I'm going to draw this channel right here. I'm going to draw it sideways just like that. Draw the parallel line up to the highs right here. I do believe we'll bump our heads up there around 19.5, then come right back down. So again, here's another one for the swing traders. You love these trading channels or these sideways trading ranges because you could get in and out, even for the intraday traders, on fairly good volatility. So that downside target's still in place right there. Let me get that little data box to pop up, and that is going to be 555.58. Moving right along to the VIX, you could see that we do have a pivot lower today. I do think we could come right back down to test that support level, which is the moving average. That is a pivot, lower high, lower low. So early on in the week, I think we could come down, and then what I'm going to do is I'm still going to match that high back here, right there at 26.68. So I'm going to change that 26.68. It's going to look a little bit more vertical when I do it, but it's still going to be the same target as we do more or less a two-part forecast right there. See? So it's matched with that target. I think we could pull back, like I said, to the moving average and then pivot back up in what is known as an ABCD pattern. We do not have any pivots lower prior to today. So here we have A to a pivot lower that formed today, which makes it B. A bounce off of that moving average will bring us to C, which ultimately leads to a higher D. That is how the ABCD pattern works. It works on the way down as well. A to B, pivot to C, pivot lower to a lower D. ABCD, ABCD. If you'd like to learn more about ABCD patterns, just check the description box below. You'll see a video down there that highlights more of that with the strategies that we can apply to those very common patterns. So that's the VIX. Now, like I said before, I'm going to go back to the major markets and I'm going to look at the weekly charts. Notice what we have here. Again, another hanging man. But if you look down below, the oscillators are looking much more bearish. Now, the longer-term charts trump the shorter-term charts and also trump all the oscillators on the daily charts. So we have higher highs here, but we have lower highs on the oscillators. That's known as a negative divergence. If I go take one more step back and look at the monthly chart, what do you have? Negative divergences here. There's a hinge on the monthly CCI, a hinge on the monthly stochastic, and we have that Y divergence from the moving average. It's going to be the same exact thing for all of the markets. You see the negative divergence here on the monthly chart. See, we have lower highs. Look at the QQQ. What do we have? We have a hanging man, followed by a hanging man, followed by a smaller but still significant hanging man. And look at the CCI starting to hinge lower on the monthly chart. The same thing is going to be seen on SPY. Negative candle right there. That's a bearish harami, by the way. That red body, although it's slight, is falling within the previous green body. And then if we look at the VIX, you can see that we do have a monthly chart that is pivoting higher. Let me zoom in here for you. You can see that we have an inverted hammer here, which is bullish, and we have a half signal. We have a higher low here with the CCI on the VIX starting to pivot up. So that is the technical analysis on all of the time frames. Now, as I mentioned on Wednesday, I am going to talk a little bit about the politics and the geopolitical environment right now. The U.S. and Israel are now discussing the option of striking Iran's oil infrastructure in the Persian Gulf. Now, if you've lived long enough through other conflicts that we've had with Iran, if that were to happen, like it has happened in the past, especially in Iraq, when they hit the oil fields, oil tends to go much higher. Now, do not believe what you are seeing in the news with regard to the strikes. The news reports are coming out saying that there was not damage by the missiles launched by Iran, but in fact, and you can see this is put out by the Iranian military, they have been hitting targets, and Israel is not admitting that. Of course, you don't want to admit your weaknesses to your enemies. You want to more or less show a strong face, but they are hitting targets, and I do believe this is going to escalate. And I do believe ultimately that's going to affect the global markets, particularly the U.S. market. Now, going to more of the economic data, we had some unemployment numbers come out. I don't believe the jobs numbers any longer since the 818,000 revision that we had. I think they're going to revise those right back down. You watch. Mark my words. We're recording this again here on Friday, October 4th. They will most likely revise those lower. In the meantime, look at the leading indicator here. This is civilian employment rate, and whenever we get the uptick like we have seen recently here, we generally get recessions that follow. Now, this has been correct 100% of the time, and 30% of the crashes have happened with a rise in the unemployment numbers. Now, again, I am questioning the unemployment numbers that's coming out from the agencies, but as I just said, I rely more heavily on the labor participation rate. You can see this is seasonally adjusted, and over the last 2.5 years, you can see how we rose out of the COVID crisis. And now if you look, if you just draw a simple trend line like we do on the charts, you'll see that the labor participation rate is in decline. And so that is the real number. You cannot manipulate this as easily as you can with the jobs reports and some of the inflation indicators. Now let's talk a little bit more about our national debt. We are now approaching $36 trillion in debt, and our taxpayers are being stretched to the limit. How much are they being stretched? Well, $150 billion worth of taxpayers' dollars is going each and every year to support illegal migration in this country. Now, this is coming from Congress. As you can see here, you can just go to www.congress.gov and pull up this chart yourself. But you can see this article came out precisely at $150 billion in the cost to taxpayers, and Congress is backing that up with their own numbers. Now, in addition to this, you have to understand that this is going to put a big hurting on consumers who are ultimately going to cut back on their buying, which in turn affects the earnings reports on a lot of the major companies, especially the retailers. Now, I want you to look at this. Again, this is from the Congressional Budget Committee, looking at welfare and how it's being divvied out to U.S.-born citizens, legal immigrants, and how it compares to now the illegal immigrants that are coming into our country. Look at the purple. Look at that. That is absolutely outrageous. And what's happening now after the tragic events of Hurricane Helene, which here in Cedar Key was still suffering? My wife and I spent the good part of the day helping friends dig out of their mess. Up there in Asheville, North Carolina, it's a mess. And what happens? Well, Mayorkas comes out and says they don't have enough funding to last through hurricane season. So Kamala Harris goes out there, slaps everyone in the face with a $750 payout from the government, which barely covers shovels and garbage bags. I'm telling you, folks, this is absolutely outrageous. Now, let's go back and look at the markets, because my objective here is to teach everyone how to crunch the data, how to look at the charts, how to put it all together using our 7-point trading checklist. You may have caught me on X where I put out Bitcoin forecasts, and as you can see here today, we hit my most recent upside target. We're hitting targets 100% on Bitcoin, and our members are doing extremely well with the Bitcoin related trades. For those members who had a chance to get into the Coinbase trade, both on the puts and the calls, you're already up $2 on a $9.50 investment that we put out yesterday. And congratulations to all of you who participated in that. If you are interested in a membership, by the way, we give away 15-day memberships absolutely free. And when I say free, I mean it. We don't even take your credit card. You just come on over to StickyTrades and you'll have access to our member services. Here's an example, the rapid fire results page. If you put in BTC here, you'll see that we have a 100% hit rate on Bitcoin. If you look at Coinbase, COIN, and you get the results here, you'll see that's a high percentage as well with 83%. You could put in Riot, which is another high hit rate of 94%. and it goes on and on. So what I tell our members is before you make a trade, put the ticker symbol in this little box here, this little search window, and it'll show you how accurate the hit rate has been, which means that that particular stock, if it comes in with a high percentage, it means that particular stock follows the technical signals very well. It could be Apple, and you'll see how that compares to some of the other ones. Apple is one that we analyze quite often. That's an 80% hit rate. If you look at, well, what's another one I was looking at the other day? If you look at Johnson & Johnson, which we just looked at, you'll see that's a 72, almost 73% hit rate. If you look at stocks like PFE, which is another pharmaceutical stock, I don't know how many times we've analyzed this one actually, 13 out of 15. Okay, you got 86%. If you look at CCL, which is Carnival Cruise Line, and we have a position in this one, you can see that that one has almost a 93% hit rate, and we have a position in this because they hit the targets upside and downside. Now, again, I addressed this on Wednesday. We have a very, very high percentage of time that our targets hit. It is the best in the world at over 82%. And we are giving this service away to members who want to come on for a free 15-day trial. Come on over. The link is in the description box below, and you can join us in the next rapid fire stock analysis session. So one other thing about Bitcoin before I go is that you are going to see me put out another target on Bitcoin on X. So you could go follow me on X and get that by following me with hashtag AJBTCForecast. Folks, thank you so much for your support. We're building our subscriber base. Please like and share this video. It really helps the algorithm, especially when you comment. I do my very best to address every single question and every single comment that comes into the YouTube page. You could go back and check that to see how I've responded to a lot of questions. You could just learn just by looking at some of the comments down there. So again, thank you so much. Have a great weekend, and we'll talk to you on the next video. So long.